Hey, it's Brian Mudd. This is my cheat sheet for Thursday, December 13th. I've got a lot of stories that can impact your pocketbook and how you think about your money for the rest of this year and certainly into next year. First, I'll start real quick with the listener question of the day. And a reminder, if you have a question or a topic that you would like me to address in the cheat sheet and on air, I am taking one every day and including it. In today's question, why is the stock market holding up? What's going to happen based upon fiscal cliff and all of that? The listener reader had a hypothesis that all of the special dividends were playing into the stock market holding up. And that's a pretty good hypothesis. I've got a few different things for you, and this can factor into how you think about the stock market. First and foremost, they're counting, and they being money managers and the folks on Wall Street, they are counting on a deal getting done. 82% of all economists, 82% of all Wall Streeters believe that a deal will get done and we will not go over the fiscal cliff. So first and foremost, the market is largely trading as though it's business mostly as usual with the fiscal cliff not being a huge issue. That is the first huge risk, number one. The second piece of it is, the more important thing about a deal getting done isn't the deal itself, if something does get done before December 31st. It's the policy itself, which is why speculating on a deal when we don't know what the outcome is going to be and how that will impact investments is somewhat dangerous. If taxes dramatically increase on investment, then investments necessarily are worth less, because the only reason you invest your money is for a return on investment, right? And so the fact that you have the market being propped up in part because Wall Streeters and pros don't think that we're going over the cliff has nothing to do with the actual policy. So in other words, in the absence of not knowing anything, they're just kind of going about business as usual, and they're taking and dealing with things as they can. Now, the listener mentioned the special dividends. That's a big part of it. We have a record payout in special dividends. The payouts are up over 130% over the same time last year to an all-time record. We do have tens of billions of dollars in special dividends being paid out, and you have to own those stocks past the ex-dividend date in order to collect them. So that's a pretty good hypothesis as for why the market's holding up. The third and maybe the biggest reason of all, where else are you going to go with your money? A lot of people just don't know where else to go. The bond market is stretched. I'll tell you this, it's a terrible idea to commit to long-term bonds. 10-year, 5-10-year treasuries, you're going to lose money with inflation. Where are you going to go? Overseas with your money? Well, take a look at what's going on in Europe and a lot of other economies. Fixed income, obviously, you can't earn anything there. So in the absence of good options, a lot of people are just going along with the status quo. So anyway, I hope that helps, but here's the big risk. There is more risk in the stock market right now on the downside than there is upside if we have good policy, which I don't anticipate out of Washington. I have identified that if taxes go up the way the president has wanted, that the Dow, for example, which is at 13,200 right now, would have intrinsic value of 11,700. Again, that's not a target. That's based upon the president's tax plan. So we shall see, right? Okay, foreclosure rate jumped in November, but why this is good news. We ended up seeing foreclosures jump by another 5% year over year. These are the actual redemptions in November. That's great news because banks are getting through the foreclosures quickly and putting them into the market because there's demand. Here's the more important number, though, the one I always talk about as being the best barometer, and those are new foreclosure processes starting. And that number dropped dramatically. We've seen the biggest one-year decrease that we've had in years. In November, the new foreclosures, those that just started in the foreclosure process, dropped by 28% year over year. 28% over year, which tells you that we are making dramatic progress in getting distressed properties through and back into strong hands going forward. And we're going to have many fewer foreclosures a year from now, 2 years from now. So dramatic turnaround in new foreclosure news. That is another excellent sign for the U.S. housing market. Let me talk about the real fiscal cliff for a moment. This gained no attention yesterday, and I wanted to scream. The real fiscal cliff, it really isn't what's going to happen here on December 31st and January 1st. The real fiscal cliff is what we are doing to destroy the United States of America with debt. That's what the biggest problem is. We can argue about policy all day long and who pays what tax rate. But if we continue to accumulate debt the way we are, it's a moot point because we're going to collapse and we're going to be negotiating with our debtors the way that countries that are in debt in Europe negotiate with their debtors, which means, hey, China and Russia, hey, boys, how about you cut us a deal? And since they like us so much and agree with our fundamental values so much, you know that story's going to end well. Here's the reason I say this. You know what the U.S. debt was in November? A new all-time record. New all-time record for November. Over $170 billion. $172 billion. If you do the math on that and annualize it, that's over $2 trillion in debt. Over $2 trillion in debt. That's staggering. Here's what's scary. Beyond all of that, that's a 25% increase over November of 2011. So not only are we not making any progress in slowing down the new debt we're accumulating, we added 25% more debt year over year to the November number. Does anybody care? Does anybody realize where this ends? I will scream until nobody wants to listen to me anymore. If we continue accumulating debt at this pace, the United States of America will collapse under the weight of its own debt by 2020. I'm sorry, that's a reality. So that's the real fiscal cliff. What's going on with your money today, how you're being sold out, how your kids are being sold out, and how Medicare, Social Security, none of that is going to be a reality because we're going to be collapsing before those programs are even set to collapse because of this debt that we're accumulating. Please, please advocate for sound policy. I mean, the one thing we need above all else is a balanced budget amendment to the United States Constitution. I'm sorry to be the Debbie Downer here, but all right, a couple things real quick. Google Maps for iOS is here. The new app, and I downloaded it. I haven't toyed around with it. One of the cool new features, the features that are available for it on Android are now available on Apple devices, meaning the voice recognition software and the Google Maps feature. So this is most likely going to be a much better product than the Apple Maps feature. Test it, try it, have fun with it. I'll be doing the same today. And I got plenty more for you on the Fiscal Cheat Sheet. Enjoy yours, and we shall see you tomorrow.